Okay, everybody. Hello and welcome to Investing with IBD, sponsored by MarketSmith. Today is June 3rd, 2020. I'm your host, Arusha Pires, and today we have a podcast favorite returning back to the show. Mike Webster, head of market strategy at IBD, has returned. Mike, thanks for being here.
How long has it been? No, that was pretty good, but you could have had a little more gusto, like the best guy you've ever known, the coolest trader. But hey, it's fine if you want to downplay it like that because you had Mr. Wonderful last week, so now you're slumming with,
since you've
with
come,
Webby.
Yes, exactly. since you've been here last, the standards have been raised a little bit. So
okay, well, I just have to say it is just really hard following Mr. Wonderful. I'm so proud that you got such a huge guest.
Thank you.
Now you can go from an A-lister to a Z-lister.
On today's podcast, we are going to talk about the current market. We are going to talk about the power trend and how it can help you stay in very strong markets. And then we will end the episode with 3 current stocks. So let's get into or maybe 4.
If I don't talk too much.
That's right.
So maybe 2.
We would have been done recording this podcast already, if not for all the preparation. But let's get back into the current market. The market continues to be in a strong uptrend. We have one distribution day. What I'm going to do is I will pull up the NASDAQ, and give me 1 second here to share the screen. And okay, so we're looking at the NASDAQ here, and you can see very clearly that, and I'll put the little spotlight on. It's just been a super strong uptrend. And Mike, your thoughts on this pretty amazing market?
This is really unprecedented. We search for, we always are searching for examples, basically roadmaps of, when something happened in the past to use it for the current time. And there is nothing that has gone down this quickly and back up this quickly. So this is really uncharted territory, which makes it exciting, because we were like, oh, okay, well, in 1998 it did this, or in 1932 it did this, and we went through all of those bears, back when I was here last time, and so now this is just new. And what it's been happening is it's had this really steep channel that everyone, including myself, just said, hey, this is just too steep. It can't keep going at this pace. But we're trend followers. So we're not jumping off and saying, okay, well, it's gone up too far, so now we're going to, go to cash and wait. We just keep following the trend until it breaks. And in history, that is something that we've seen, especially like in the late 70s on the NASDAQ, that happened, where it just kept running up and running up and running up, and you think, oh, for sure it's over. And then, of course, in 1999, it did that too. And so you don't jump off the trend, you just ride it, and you study every day to make sure that it's acting normal. And I write a piece these days that's in the newspaper over the week, or not in the newspaper, on the website over the weekend, and I go through the day-by-day analysis, and it's been pretty much picture perfect, ever since the April 6th follow-through on the NASDAQ.
Yeah, I would say it's been even more than perfect. I mean, this is just, it's unprecedented, right? Mm-hmm. It's just so strong. It's the exact opposite of the way it was back in February and March, where everything was just falling apart. We were having the markets halted every 15 minutes, right? And we were all just like on IBD Live going, what is going on here?
Yeah.
But
it's like if you didn't have a halt, it was like, oh, things are slowing down. Where's the halt?
Right, exactly. And so now we're right back up almost at new highs, and it's just a great lesson on learning to listen to the markets. You have to. If you don't listen to the markets, if you don't have a plan in place to really manage when to get out and when to get back in again, you're going to get crushed on the way down, and you're still on the sidelines waiting for a pullback that so far hasn't come back or hasn't given you a chance to get in.
Yeah, and that's kind of the sad part, because I'm on Twitter like you are, and you hear a lot of people that are very smart, people that are saying, all the things that are wrong, especially now with the recent upheaval that's been going on. But then, of course, what brought this bear market on, or the bear market, was the whole coronavirus. And you have all the implications that they're like, oh no, a second wave this, and the world is ending. And you know what? The world was ending in February and in March, but then the market saw forward, and it realized, hey, look, the Fed is on our side. I think Powell is doing an excellent job. He's like an A++++. And I used to think he was terrible, back in 2018, but he completely changed, and he is on board. They're pumping. And you can't fight the Fed. And so what the market does is it looks forward, and you just have to just trust it, and trust that, what's going on, or the guys and the girls that are running the billions and hundreds of billions of dollars, they're figuring it out, and they've got it figured out. They're not going to come on CNBC or on IBD Live or even on your great podcast and tell you what really is going on. They're putting their money out there, and that's what this trend is all about. And yeah, it's very special. So all a very basic thing you can do is just follow that 21-day, which on your chart happens to be that pinkish or purple. What color would you call that?
It's a magenta kind of. I think that's what David.
Oh yeah,
David
magenta.
calls it. Is a magenta.
Yeah, magenta. So
right, this line right there. Yeah,
we need better colors, but
Yeah, and and for those of you who are listening to it, when you get a chance, when you're at home, go to investors.com/podcast. Throughout this episode, since we have Mike Webster on, and if you know Mike loves to show a lot of charts and go into detail a lot of charts. So this is one of those episodes which is you're going to learn a lot, and you'll learn a lot more if you watch the video version of the podcast.
Yeah, I would say that's true, because looking at this, it's really held the 21-day, and that's something that I've been talking about for 2 decades now. Is so important to our style of trading, is when the market is able to trend above it, and when it comes below it, which it will eventually, given enough time, it always does. You want to see how it acts, and if you looked at right around 8,700 or so, if you go back a week from where you've got your spotlight on, where it came down to the 21-day and bounced off of it, that was perfect. That was picture perfect, because it came down straight down, scared everybody, which is healthy.
And 3 days too, right?
Yeah,
it sold off 3 days, and that third day came down in the morning and reversed.
Yeah, which is textbook.
Right.
It doesn't. That's how short corrections happen. They're brutal. They're quick, and they come down. And it's typically 2 days down. The third day is an upside reversal, and it was cookie cutter, and that's where you put on the gas hard. And then what you do is you're using that low as your expectation breaker. So if it would have closed below that low right away, then you'd have to back out real fast of those new positions. But look at the 21-day, see how it handles itself around there, and that's where you can use it to you're always either increasing your exposure or decreasing. It's not just pedal to the metal the whole time, or on the brakes the whole time.
And one question that we've gotten recently, or over the last month or so, is, are we in a new bull market? Mike, what are your thoughts on this?
Without a doubt, of course, we're in a new bull market. By definition, they're the basic old school definitions of, you down 20%, you're in a bear market. You go up 20%, you're in a bull market. We're up over 40%. We're in a bull market. And let's go out to the monthly chart real quick, because we've talked about this in previous podcasts and webinars, that we're in this major bull market that I've been saying that is very reminiscent of the 1949 to 1966 time frame.
Well, I'm going to try to draw it while
that's exactly right. So now that, as long as we're above that, in that 1949 matches up with 2016. So if you figure we've got a long ways to go if that model holds true, and as long as you're above this line, your default is having the gas pedal down. You still look at it on a day by day basis, but your default is we're in a major bull market when you step back from it. But then let's go back to the daily chart real quick.
And while we're on the weekly chart,
sure.
just very quickly, it was really interesting because in February, when it was coming down and it broke the line, we were like, oh, okay, well maybe we're under it. Maybe this market's going to be a little bit more choppy. But the one hope we had during that time was maybe it comes back up half the way and gets back above the line, and that's exactly what happened. And that's where it got the confidence that okay, if we get a fall today, we might have a chance here.
Yeah, and getting back above that line was, the same thing that happened in January of 19, where once it got above it, you needed to be aggressive, and that was the time to put on the gas pedal. It was the same thing here. So if we test this again, then that's what you need to do. As you come back through it, then you need to put on the gas pedal. Now, eventually, if you go back and study the 49 to 66, it cracked through it and then didn't come back, and then it turned into a sideways market from 66 to 1982.
Yep.
And once you recognize you're in a time frame like that, it's okay because you have a trading range, and you know that when you get up to the top, you need to be defensive. When you get down to the bottom, as you're coming down to the bottom, you're very, very defensive, and as you're turning up, you put the gas hard. So you just have to know what type of environment you're in. And you're in a major bull market from a big standpoint. And let's go back to the daily real quick. You're in a, really from April 6th, if you could just point out April 6th on the chart.
April
there. Yep. That was your follow through day.
Yep.
You had
on the NASDAQ. We had one on the S&P over here, but that was
pathetic.
Yeah, that was pathetic, and we were, we bought a little bit, but we were expecting it to fail.
Yeah, but then it was a game changer on the 6th there, because that's what you like to see with the follow through. Now, follow throughs are tricky because you don't have to have it. You don't have to have massive volume. You don't have to have a huge move, but you want to have it, and it's great to have it, and it's very convincing. And that was, you want a convincing follow through, especially after the severe devastation that we had. I mean, I've never seen anything like that. That. Have you?
Yeah. No. And just how vicious and quick it was, and how quickly we went from an uptrend to a severe downtrend was shocking. And it made me appreciative of having rules, because my emotions would not have gotten me out at a decent time. And then you had this follow through day on April 6th where it was up 7.33% on that day. I mean, you want to talk about a massive fall through day. You don't see too many fall through days that powerful.
Yeah, and actually, let's go to the weekly chart on this, because there is an important point. On there, it was an outside week on that bottom week, and if you have, I went back and studied. There were only 3 other times where that happened in a bear market situation, where you'd hit fresh lows, you were underneath your 200-day, you were underneath your 50-day. And you had a big outside week like that. And, the examples were, I think, 1973, 2000, and both of those didn't work because we continued on in the 73, 74. And of course, in 2000, we went down to October of 02.
Right.
But in March of 09, it had a very similar look. So that was our one example of, wow, maybe this can, this is our one model, at least from a weekly standpoint, that where it was a major market bottom. And going back to what I was talking about before with very smart people who are negative, you remember in 09, it was the same thing. The smartest people I knew were so in touch with everything, all the fundamentals, and laying out like, this can't work. The world is still coming to an end. And Bill was sitting there going, hey, we've had a follow through, it's go time. And all of us were the same thing. It's like, we were just scared to death, thinking the world was going to come to an end, just like with the coronavirus. You remember, at the end of March, it was like, wow, what is going to happen?
I was scared. And we avoided most of the downtrend, and I was still scared to buy at that time, because I had the assumption that the first couple of fall through days was going to fail, right? But
then
again, it's like, it does happen most of the time. But that doesn't mean that happens every time, right? And so you have to put some money to work. And it's not like I went in that hard at that point. I was maybe 5-10% invested at that point. But then, it changes that mindset. It changes the momentum. And then over the next few days, few weeks, you slowly buy more, and all of a sudden you've shifted back from a bearish kind of playing defensive mode towards now you're back on the offensive because you're seeing progress on the stocks that you bought.
Exactly. And you always take it, and that's what Bill has always taught us. You take it day by day and you remain flexible. And you can't ever just say, hey, I'm a bull now and I'm always going to be a bull, because he would be a bull on Sunday and come Tuesday, something bad would happen and he was, moving out of the market just rapidly. And you have to not care what you said before. You said what you said based on the data that you had at that time, and you have to just be flexible always, or you're going to be dead.
So the market is in a strong uptrend, and we potentially could be in a bull market, or according to Mike, we are definitely in a bull market,
Raging
and not only a raging bull and a major bull market. But remember, be disciplined. Don't run out and just start buying stocks. Don't chase stocks. Let the market come to you. Let's take a quick break, but when we return, we are going to talk about the power trend and how this indicator can help you take advantage of a great bull market. We'll be back.
I am here with Scott Sinclair. Scott's one of our senior product coaches at MarketSmith. Now, Scott, there are a ton of publicly traded stocks just on the U.S. I think it's over 5,000 stocks. Who has the time to go through all of these stocks and find the very best ones?
Yeah, most people don't, right? So what you need is a tool like MarketSmith. We have decades of research on what makes a great winning stock. So we've done all the research for you. So we're going to try to highlight those specific stocks with those great data points. So if you're looking for that next great potential big winner, orange stock ideas button, you just click on it and you've got some of the main reports that we use, including the Growth 250.
Yeah, and the Growth 250 is the first list that I go through on the weekends.
Yeah, it's the most popular one, but there are others. There's the Breaking Out Today, Stocks Near a Pivot, and then the Blue Dot list, right, which is very popular. It's going to show you the stocks with the best relative strength. So we've done a lot of the work for you. What you have to do is review these lists. You're going to come up with some of the best ideas in that current market environment.
Perfect. MarketSmith saves you time and makes investment research that much easier. For more information, go to investors.com/podcast2020.
Mike Webster is our guest on Investing with IBD, sponsored by MarketSmith. Okay, Mike, let's get into the power trend. And so what I'm going to do is I'm going to pull up a MarketSmith chart again, and then we can highlight the power trend, the most recent power trend. So let me go to the daily chart, and it was May 8th, right?
That's
so
correct.
It was this one right here, right? Okay, so walk through the concept of a power trend. Well, first, I think walk through kind of the larger goal behind the power trend, why you came up with this indicator.
Yeah, so boy, it was like 10 years ago now that Charles Harris, a great friend of mine and probably the best trader that I've ever witnessed besides Bill, and Justin Nielsen, from IBD Live, and we took on this project. It was called Market School, and we were going to try to make black and white rules to mirror what Bill was doing in the market, because there's the follow through and then there's distribution, but there's all this in between. It's just like buying a stock at a pivot and selling it at a climax. Well, that's great, but what about all the nitty gritty in between? How hard do you put on the gas and everything? So we wanted to come up with just black and white rules, because you know how it goes. When you're just kicking butt in the market, you end up taking more risk, right? Which is great until the end. And then if you've been kicked around, you need to take on risk, but you're too scared to, because you're like, wow, I just lost. So we wanted to have something as a gauge. It was kind of a speed limit of saying, how fast should I be going? Because if I'm 5 miles, going 5 miles an hour and the speed limit is 55, there's a problem. If I'm going 100 miles an hour and the speed limit is 0, I've got a problem. So we took on this massive task, and it was huge. It was something that I'm most proud of working with a team, a great team, to come up with. And we just started the way Bill started with the model books. he wanted to know what made stocks go up. So he started at the beginning and looked at them. We did the same thing with the market. And we printed off the history of the market on daily charts. And then Charles and I just took different highlighted pens and we said, okay, well, green is for the market you want to be in, red is for the market you want to be out, and then there was something for this choppiness. And then so we just studied it and came up with rules. And then Justin helped us out with that, and he had this massive Excel spreadsheet, and we'd say, well, what if this happens, and what if that, and let's try all these different rules. And in the end, we came up with, buy signals and sell signals, and that tallied up to how deep in the market. But then there was this other thing that would happen, and we noticed with Bill, sometimes there would be 5 or 6 days of distribution. He'd say, you got to get out of that market. That market's going down. Other times, there'd be 7 or 8 days of distribution, and he'd still be buying. And we're saying, there's something unique here. And what it was this power trend, this special time in the market where it's stronger than normal. And so we just backed into that. We looked at all these big trends in the market over time and went to the very beginning of them and just did it completely Bill style, saying, okay, at the very beginning, like your pivot, what do they all have in common? And we came up with these characteristics, and we tried to keep it as simple as possible. And so
how many do you remember how many power trends over the last 100 years, or because you looked at all of the markets that were available, right? So
yeah, we looked at everything, and I will try to look for the spreadsheet with them, but I'd say less than 200 on the history of the NASDAQ. Now, some of them are short.
It's a lot more than, yeah. Well, yeah, what was the shortest one?
The shortest one, I think it was just a few weeks that it lasted. Okay.
Yeah.
Most of them are longer. It's just like think of it like a base breakout. You get those base breakouts. It's a one-day wonder. It goes up and then it comes right back down.
Yeah.
But it was when you come up with rules, you want to make sure you're not you're not data fitting, and that's what we were very careful to not data fit, because we could have kept up. You can go and come up with some very specific rules to get everything exactly right. But that's not going to work in the future, because now you're just looking and saying, okay, I've got this set data and what rules will work. We were everything every day was be intellectually honest, which is very hard for researchers to be and be conscious of it. Mm-hmm. So what we came up with is that I'm just looking at it to make sure that I don't forget anything. Is first, your low is above your 21-day, and we use the 21-day exponential for at least 10 days. So that's one thing. And then the next thing was your 50-day, or your 21 had to be above your 50-day for at least 5 days. And you always turn on the signal on an up day, because that was just a Bill concept of, we never saw Bill increasing exposure on a down day. So that was simple, just on an up day, just to be intellectually honest. We could have had better performance if we did it on a down day. But then the last thing was we wanted that 50-day to be in an uptrend. Now, this is where we gave up a lot of juice on it, because if we didn't use that rule, the performance of the power trends would be a lot better. But what would happen is your loser rate or your failure rate would go up too, because when you're coming up through a declining 50-day, the odds are stacked against you. So it's just that little bit of extra, and that's typically the thing that you had to wait for. And that's what happened here. Like, where our low had been above the 21-day for a long period of time.
Yep.
Yeah, your 21 was through your 50 for a while, but we had to wait for that 50-day, patiently wait for that 50-day to turn in and to move up.
Which was May 8th. Fine.
May 8th. Yeah. So
which was a long time since the fall through day of April 6th.
Yeah. And so this is not an extra buy signal. We were already, with our market school rules, we were already we were at a +5, which means 100% in, early in, like right after the follow through.
Yeah. And also, when last time you came, we spent a bunch of time on when these markets get over the 21-day. That's a big positive, and you want to have more confidence in that if you have a falter day too.
Exactly. So why don't you look at the April 6th follow through, that first one. So right there, that was your green light. You had your follow through day, and then 2 days later, it was an up day, and your low was above your 21 day. So that was another huge signal. Plus, it was another, big up day. And so we have all these rules that are buy signals, and so we were deep in very early. So it's not that we're waiting for the power trend. What it is once that power trend turns on, you say, I'm in something special. I'm in something that could be a lot longer than anyone thinks at this point. And so I'm going to just default to being more aggressive. And that, with the market school rules, that translates into a whole different shift of how we look at rules. And that would take 6 hours, honestly, to go through. There's a home study on it, and that gets into it. But essentially, it means you're more aggressive. So why don't we look at some historical examples? And what I'm very happy about is that we did this all off of the NASDAQ. And then you go back, and if you do an out-of-sample study that's on the Dow or the S&P or any other index, it's working there too. And so we're going to start off in history. And I wanted to start out with 1949 because we had talked about how I was using that precedent from 1949 to 1966. So look, there's where that power trend starts. And again, we were waiting for that 50-day to turn into an uptrend. That was that last missing piece. And look how far it goes. So it doesn't mean when it ends that you're waiting for that to end. Obviously you would have, on that gap down below the 50-day, you would have been out of the market.
That's
at that
right,
point.
over here. Yep.
And we have all these signals that would have, gotten us out. But what it's saying is that when that 21-day going back through the 50-day, which is what turns off the power trend, you're waiting for that to happen to say, okay, the special occurrence is now over. Now we have some other rules, or circuit breaker rules, that we were going to talk about today, but after looking at them, dusting them off, it's just too confusing. Like really confusing.
I'm glad you came to your senses on that one.
Yeah.
Or I was going to have a really nice long nap during when you were going to explain that.
Well, when we used to teach that at live seminars, oh my God, you'd have people passing out.
Exactly. I remember sitting in the seminar was like 8+ hours or something. Yeah. And I was like, I like the idea, but I'm totally confused.
Imagine having to teach it.
It's true. It's true.
And then Charles wouldn't remember all of the rules, but he'd rely on Justin and I. He'd be like, what's that one? We had the stuff down. Oh my God.
So for this example here with the 1949 power trend, it started on July 26, 1949 and ran all the way till June 29th, 1950. So almost a whole year.
Yep.
Now, obviously, a few weeks before, you had started getting out because it started to sell off in short distribution, and then, of course, it gapped down below the 50. So most of our stocks are probably getting hammered at that point. But
look at that 21-day on there and pay attention to that. That is, just like it always says, most of the move happens above it. It comes down and goes back up, and when it tests it in a positive way, that's again where you put on the gas pedal.
Yep. Okay.
So let's look at another one. And we'll go through the rest of these quickly because this is something you guys should, what I would do if I were you is I would, watch this on video and then go back into MarketSmith, do a change date and study these. So this one is so long that it couldn't even stay on the entire chart.
It's incredible.
So October 28th, 1953, again during that major bull market, it turns on and it stays on this whole time. Let's go out to the next slide. And it goes this entire way until August 22nd, 1955.
So that's almost two. What was that? I'm going to go back for a second. So a year and a half.
Yeah. It's
without
massive.
it going. Yeah. Without it. So what turned off this power trend? Did the 21 went below the 50?
Just barely, and it went through. And so rules are rules, and then what happened is it turned and went higher. And so our, you would have still had exposure. So it's not a sell signal. What it is it's saying your default is no longer the gas pedal, and you look
So
at.
you're getting off margin at that point. Is that or?
Well, yeah, you would only really be doing margin within market school when a power trend is on, because that's
when it goes, because you have 5 counts in market school, and then 6 and 7 are the margin. The 6 and 7 can only happen on a power
during
trend.
A power trend, yeah. And so you can see that gap down that happened,
Yes.
and that's not bad data. The other chart had some bad data. That's the Eisenhower heart attack, and Bill would often talk about that and say, oh, when the Eisenhower heart attack happened. Now, I don't think he would have been very brand new of trading. I'm not sure that he was actually trading in 1955. But still, I mean, that was a big impact in the market. And you can see that, it went through this little correction and eventually came out of it. So let's look to the next one. So these I had put in my stock market update, which is my weekly piece.
You love plugging that. I'm kidding.
I never had anything to plug before. Not that I'm getting anything out of it, but dude, I spend so many hours writing that thing. I want people to read it.
It's very, very good, and we'll show everybody where it is.
It's not really good. It's excellent, I would say.
My bad.
So look at this one. This is you've read Darvis's book.
Yes,
this is when he was making his money. During this 1958 power trend, May 9th.
Lorillard, was that?
Yeah, that was one of them. Diners Club, and
that's right.
God, was it? It wasn't Zenith. I can't believe I'm blanking on these, but was it Thicol?
That's right.
Yeah, Thicol.
Yeah.
So he, in fact, all of the stocks that he traded ended up being model book stocks. Like, he was the excellent stock picker. It was, he had everything right. So anyways, you're on this entire time until September 2nd, 1959. Your 21 day goes through your 50 day. And now you've switched gears. You're no longer saying, hey, by default, I'm being aggressive. So let's fast forward. I think the next one's in the 80s. Yeah. So the very beginning of the major bull market, right? This lasted from 1982 to 2000.
This is where how IBD was funded.
Yeah.
Right.
Because Bill's a stud and he made all that money, right?
Yeah, exactly.
No one better. No one better. And so September 2nd, 1982, it starts and ends over there on July 29th, 1983. Again, 21 day, just rolling over through your 50 day.
Yep.
So let's see the next one. So you guys are getting the idea. This is 2003. I remember this like it was yesterday.
Me too. Yep.
Yeah. Right. It was. I mean, this was. Everyone was so scared, and that's a whole topic for another day. But so April 29th, it turns on, and 2003, February 27th, 2000, it turns off.
Mm-hmm.
And that would help you during that time frame. There was very choppy in there. Like, if you step back and looked at a weekly chart, it's like, oh, it just goes straight up. You look at a daily or an intraday chart and it's all over the place.
Yeah,
that's what's helpful. If you have that power trend going, you're like, okay, don't get stuck in the intradays or the dailies as much. Your default is to step back and say, it's still in an uptrend, power trend. And so my default is to be aggressive. So let's look at I think the last one. So this is and we've talked about expectation breakers, and you can see that over on the left side of the chart before things really fell apart.
I'll move the picture.
Yeah. So anyways, it starts on April 2nd, 2009. Again, the market, or the world felt like it was coming to an end, but we had to follow through. And this massive bull market started, and then the power trend ended on February 4th, 2010.
Very, very cool. And so this really just puts in, and this is one of the things when I attended the market school course.
Did you stay awake the whole time?
I did. I did. My head.
You were the one guy.
Yeah, because it was really cool, and I was very, very excited about it, because this is really one of those large questions that you always have. How long do you stay aggressive and keep pushing it, because you know that anything can happen, and the things can change in the market so quickly. And so it was really exciting for me to see that you guys studied this and put some rules in place to give an idea of it. So yeah, these are really, really cool examples, and hopefully, it'll excite others to go back and take a little bit more time to study this. And now, for once, Mike, you have nothing to say.
Oh, I thought you were. I thought you were ending, and
No,
I try to not be funny at the end because I've been told keep it boring, Mike.
Okay, I'll end now.
So look, I thought we were ending. So look, with the power trend, it is not a blanket. You stay on the gas the whole time. For those of you like Arusha who took market school, and I'm not trying to push it at all. I don't get a dime if you guys go out and buy it, so don't worry about that. But our count that goes from 0 to 7 during a power trend could go down to 1 or 0 and the power trend still be on, which means you're supposed to be out of the market, but it's the power trend hasn't turned off yet. So it's not a just keep the pedal to the metal. It's default that if the market is trending up, especially if you're above the 21-day, you're hitting it hard, because they don't, even though I said they're probably less than 200 over time, some of those are small, some of those are long, like the ones that we just looked at.
Perfect. So having rules will help you manage your emotions and give you the ability to ride strong trends for even more profit and handle these strong markets better. Coming up next, we are going to discuss a few ideas. Stay tuned.
MarketSmith will give you a huge edge in the stock market. Better stocks, bigger profits.
MarketSmith is the top research platform for IBD.
It's just the best tool for individual stock selection.
Everything within MarketSmith is designed to bring those best stocks to the surface.
It does a lot of the work for you of filtering down to the potential leaders.
It's when you take the training wheels off and you're ready to invest on a more professional level.
MarketSmith will help you take control of your investment life.
If you want to get serious about investing, start your membership today.
We are back with Mike Webster on Investing with IBD, sponsored by MarketSmith. Okay, Mike, let's get into a few or maybe 4 stock ideas. And the first one, 4. Okay, we're going to definitely do 4.
You control the stuff, so we could do as many as you want. But
That's true. But I think
how about we stop when you stop smiling? If you're not smiling, I'm not talking stocks.
Then we're gonna be here for a while, which is totally fine with me. I don't know, it'll be fine with the rest of the crew, but as you know, we could sit here and talk forever on this stuff. But let's get into Tesla, and I'm sharing my screen right here again. And okay, so here's Tesla. And I'm going to open up this panel here so we can just put. And
I think we're both for compliance reasons, we both trading this stock, and
yes.
We've talked about it before, and I think on prior podcasts. Now, this one was holding up so nicely until the market came down, and when it started coming down, it was really fighting it for as big of a move as it had from, if you look back at that October gap up, and then that beautiful run that it had, and then the climax action. I wouldn't call it a climax top because it was too close to when it started, and it was acting normally, and it actually perfectly until the market started coming down. When it started coming down, it was fighting it. It bounced off the 50-day, and then eventually, the market took everything with it. Nothing held up, and it took this one down too. Obviously, this is a heavily shorted stock, and the valuations are crazy, and there is huge risk because Elon likes to push things to the limit. So he can fail. I mean, he might be the smartest guy who's ever lived, in my opinion, but he can still fail. And, and so that pushed the stock all the way down, touched the 200-day, the black line there, and was able to bounce up. Now, this is not an ideal chart pattern. Let's toggle over to the weekly real quick. That if this was not something that you were interested in, this is really a play on the CEO and on the concept and them being a real leader in the self-driving of the future, as well as the battery cars. I mean, they're just light years ahead, in my opinion, as well as desirable. So maybe someone else comes out with a better car at some point, but still it's the cool car is the Tesla to have, and that's hard to have the cool thing. So that's what you're trading off of, not so much the numbers, because if you were just trading off the numbers, you probably wouldn't trade it. And if you were just trading off of the chart, it's a V-shaped cup with handle that's just too deep. So with all that said, this is not for most people. It's a ton of there's a ton of risk, wouldn't you say?
True. Yeah. Now with the numbers, actually, there is some acceleration in the numbers. And I'm just highlighting these on MarketSmith. So on the quarterly numbers, it's gone from negative 34% to positive 11% in the December quarter, and then the March quarter 143%. So there is some earnings momentum and sales momentum coming into it just year over year. We're using non-GAAP numbers here, but I would agree with Mike. This is more of a story play, and it's going to end either incredibly well or incredibly poorly, I think. I don't think there's any in between, and which is perfect for Elon Musk, right?
Yeah.
And I'm with you. Mike and I are both in the Elon Musk fan club. Not everyone on IBD Live is in that club, which is perfect. I mean, because we have a nice. We have a nice balance on the show when we talk about the stock, but this is something that's always on my radar, and but there's more risk because it hasn't set up your kind of normal base. So
yeah, let's go back to the daily though to just discuss kind of the technicals of it. So you had this area where if you could draw the triangle on there was this most obvious triangle that everyone, even if you've never done any work with charts, you could see that, and that it was going to break one way or another. I actually thought it was going to break down, have a shakeout, and then move higher. I think that would have been.
And we had a little bit on that Wednesday, right?
Yeah.
Last Wednesday, we had a little bit where you had that shake. And let's pause for 1 second. Let's just talk about last Wednesday. We were both, I think, on IBD Live on that day, and it was selling. Yeah, you guys can go back if you have IBD Live. You can go back and watch that broadcast because it just kept getting worse and worse, and we're all just there, talking about it. And then finally, I think I was just like, oh my God, I got to get off this show and start selling everything. I mean, you felt those emotions coming up, but then.
And what people don't realize is we're sitting here watching our personal accounts going, or any accounts that you're trading, moving. I'm also managing Swing Trader I'm doing with Justin, and we're messaging back and forth, remove this, add this, or whatever. And so that was, I would say, without a doubt, the most stressful time that we've had, and I on live, and I found it a lot of fun because it's fun to be pressured. If you handle it right. Yeah. And on that show, I have such huge respect for you. You said the exact right thing. Step back and look at the weekly charts. And, and that's always what you have to do in those cases when everything is getting killed. Now, that does not mean that you don't take action, you don't sell.
Right.
But you step back, you look at all your charts on a weekly, and you go, are they still acting normal? There's normal, there's abnormal. That's the kind of the motto that we always do. If it's abnormal, you sell it. Now, there's also, if you're like up to your eyeballs in stock and you're 150% on margin and the weekly chart looks good of everything you own and the market's coming down, you still need to take action because your stocks could be fine, but you could have just gotten over your skis.
Right.
So
exactly.
It doesn't mean that you don't take any action, but turn off the intraday chart. Don't even look at the daily chart. Look at the weekly, like you said. Assess things there first, and then look at your account and say, okay, is my drawdown too heavy? What happens if this happens, continues for 3 days? Where am I going to be? So Bill would say there's the quick and the dead. And so you do have to take some action, but that's also why you grade your stocks ahead of time. What your A, your B, and your C. Your C stocks, get rid of them,
Mm-hmm.
But what was nice about this on that day, was it held up so much better than everything else and that was kind of the tell. And you're always looking for the tell, poker players tell of, wow, everyone saw this. It should have come down, but it came down to the bottom of that triangle and just went right back up. And then we were going into the weekend, right, of the SpaceX. And yes, SpaceX has nothing to do with this directly, but it's that halo effect, as everyone used to talk about. Apple and all those products, that one would overlap onto the other one, and that's what's going on here. That launch was beautiful. It brought it. I cried. It was so wonderful. Had my kids watching. They just didn't get it. They're 18 and they're like, Dad, what? Like,
well, I mean, you remember it's like years ago, like when we were young, the shuttle launchers were huge. And everyone would kind of stop and watch. And I remember when I was young, we went to a shuttle launch, like in
you did?
yeah, which was really cool. So yeah, it was pretty neat to see that people getting excited about the space program again.
Yeah, it was nice, and I have to say, I mean, we got, as a family, we got very lucky because that the shuttle that blew up. That tragic event, my mother was trying to be on that. So they were picking a school teacher, and then you had to go through all these hoops to get on there. And she was, she was, I was relatively young, so I didn't understand exactly how far, but my understanding is pretty far along. And I think she was, upset that, but she would never show it. She's a perfect person. But then when that happened, it's like, wow, that really hit home for me, because it's like, wow, that could have been, so that danger of going up into space, that anything can happen. Those two guys, astronauts, could have perished. And so it was beautiful. It was flawless. It was unbelievable. And that translated, I think that was the catalyst that translated over to this move up. And we were both talking the other day that we think that it could easily shake out and go scare people out with that gap up. So you don't go too heavy yet. But I think it looks really good. Tons of risk. This is one of my favorite stocks, but it carries massive amount of risk because you've got the shorts on there that are getting squeezed right now, and you see that big downside reversal where it hit the 869.82 right after the earnings.
Right.
And that was when, I forget what the hedge fund manager was. He started questioning some of their accounting, and that pushed it right down real fast. So.
Yep.
That's still in the cards for, a car crash on autopilot or what have you. I mean, bad news is going to happen. It's just, that's why you can't build as too big of a position.
Yeah. So keep an eye on it, and you just know what you're dealing with. This is definitely one of the riskier stocks that I'll play with. And I don't like to have too many risky stocks out there. So keep it in mind. If it were to go, start to fall apart, and I was in it during that 869, and I was rapidly lightening up. And so just know what you're dealing with, because you have to be quick to get out of it if it goes against you, because it can fall apart pretty fast. So let's go to the next stock. And the next stock is Datadog. And let me pull that up. The ticker symbol is DDOG. And so here's a new company that has tried to go a few times to try to jump out of a consolidation back early on when it went public, and formed a cup with handle, tried to go, and then fell apart, then formed a kind of a larger, deeper cup during the pandemic, started to run. And a lot of these stocks have done this, but they broke out right before earnings, and like a lot of the other stocks, this is probably the kindest earnings season I think ever. They gapped up, right? The reactions have gapped up. It's acting really, really well. Super extended right now. Mike, what do you like about this?
Yeah. So when it first came out, I wasn't that into it because it seemed like just too volatile for me. And then this last cup that it formed, I wasn't crazy about that either, because it's pretty deep, and you have that gap down in the middle of the base that I wasn't a fan of. But you have to be flexible, and that's something that Bill has taught us, that you change as the data changes, like I said earlier. And this is forming not a high tide flag, but it's in the spirit of a high tide flag. And why I say that is, I'm seeing a lot of people, especially on Twitter, saying, certain things are high tide flags because they're just measuring 100% move. And, I talked to Bill about, where do you start the beginning of the move? And it was a squishy conversation because it's an art. There's not an exact science. So I went through back when I was doing pattern rec and tried to make it an exact science. And it is very tricky and it's proprietary, but in general, you're never ever looking at it from the bottom of the base. So the 2888 that it's moved up from there, that's not your flagpole. Your flagpole is going over some sort of area of resistance. You can't have too much overhead. So I would say just shortly, exactly. Just that day right there, because you had a little bit you didn't have immediate overhead resistance. You weren't down in the bottom position of it, and that's where you start. And even if you started there, you're not quite at 100%. But the reality is a lot of the even classic high tide flags that Bill had traded or modeled the pattern after really were only, their flagpole was up 90% or 85%, and then they went on to have huge moves. But still, this is in the spirit of it. And so what do I mean by the spirit? Let's go over to the weekly. And there's two ways to look at his rules. Or black and white, it's either it is or it isn't. And in this case, it wouldn't be a high tide flag. But if you look at the spirit of the rule, is you have this rapid advance and then you don't give up much room. Now, he would say 4 to 8 weeks up 100%, and then you don't give up more than 20%. It's really more like 25 to 28%. And when you look at a larger sample size, especially like a Taser, the AAXN, the 2003, 2004 move is something we're studying. And you'll see that the flags can get deeper to, to a 28% there. So this is within that model of the flag pull. It's not giving up, or the flag itself, it's not giving up much room. So what's that telling you? It's telling you that people used to think this was a $40 stock. Now they think it's a $70 stock on both sides, the bears and the bulls. They're fighting each other, and there's still, it's in balance. So there's no real new price discovery at this point. And that's saying that this is now a $72 stock until proven otherwise. So it's tight for a highly volatile stock. So this is setting up for what I think is like a high tide flag potential move. Now, I'm not in it yet, and I'm looking to get in it. And let's go back to the daily. And you should study all the high tide flags that Bill has in his book and notice that it's not always
the How to Make Money in Stocks book.
How to make money in stocks. It's not always the absolute peak that it has to go over. You're looking for some sort of area of resistance. So what I would say with this one, you could make an argument that near the close that it actually went over that resistance of a few days ago, or you could say the day before that top day, that was your resistance. But it's tricky, because this could still go sideways for another couple weeks and still be in character of that high tide flaggish type of move. But I'm very impressed with it. And, I used to think it was a dog, but, I really, and there is something special there.
Okay. So Datadog, another one to keep on your radar, a super strong move. Just remember also this one is going to carry a little bit more risk, but sometimes a lot more risk. Yeah. Maybe not as much risk as a Tesla, but it is pretty close with the way how extended it is right now. It's not near one of our traditional buy points that we look, but it is a super strong move that you want to has a spirit of a high tide flag. So let's get into we'll go to Lulu very quickly, Mike. Because you wanted to.
Yeah, this was just a point where you just have to admit that you're wrong, And when this was coming up, I remember Scott Sinclair, a good friend of both of ours, that was also on IBD Live. He was, really for this, and I was really against it because I thought, let's go out to the weekly chart. That I just thought, hey, look, I'm a cheap dude. Like, I'm not going to be wearing. While we're all confined to our house, I'm not going to be wearing Lulu stuff or buying extra Lulu stuff because it's a show-off type of thing. It's like, hey, I've got this cool Lulu pants or shirt or what have you. Now, I've never worn them, so maybe they're as comfortable as everyone says.
Apparently, they're I haven't worn them either. Apparently, they're really comfortable. Scott wears them. Well, Scott has some Not the
and his
yoga.
wife,
I think just the
and
regular.
his wife has
men's,
a bunch of stuff, and she's a yoga instructor. So
And Jim Harbaugh, who's the head coach of the Michigan Wolverines and former head coach of the San Francisco 49ers, and pretty well known in football circles, but he's all about, I think he's maybe even is one of those celebrities for them, but all he wears, I think, is like Lulu pants, which surprised me because he's such a kind of the manly man, but he's happy to wear Lulu pants because they're really comfortable.
Well, I'll have to say the guys behind me, Buddy Guy and Johnny Lang, great guitar players, I've never seen them wear Lulu. So there still is an audience that they have to reach. So if you see Buddy Guy out there wearing, polka dot Lulu outfit, man, okay, there's no one left to buy. But look, the point is, I'm not in this. I'm looking to get back into it. And you just have to admit when you're wrong. And I remember we were trading Coach back in the early, maybe 2004, 2005.
Yeah.
And this seems so similar that, I gave it to Bill over the weekend for us to put on our list, that we would sell to institutions. That's what we could trade off of. And he was trading it, and he's like, why aren't you trading it? I said, I looked at it, it's $300 for a purse. Who would pay that much for a purse? I didn't know that was cheap for a purse. And so you have to, just kind of put your personal take on things aside and just look at the reality of what is the chart doing. The chart just was telling you, what people are buying. You're wrong, Mike, and be flexible. So
yeah, and I mean, this is a good example of sometimes there some of these bases, and this is kind of a very V-shaped type of cup with handle that broke out maybe 5 weeks ago. And we're in that kind of market where these things are going to work. And, I mean, in the end, if it has such a great story, which Lulu obviously does, there are going to be a lot of institutions that are happy to park a bunch of money into this stock.
Yeah, and I don't think that there was an ideal entry point. So I'm not saying that I'm not kicking myself for missing it. What I'm saying is I didn't believe in the thesis right now. And the point is, it's just kind of like the people that are negative on the general market.
Mm-hmm.
That, saying, oh, geez, the coronavirus is still going to, there's going to be another wave. It's going to bring everything down. Well, no, the market's going up right now. And so that thesis is wrong. My thesis on this was wrong. So you just have to be flexible. It was more of a teaching point than anything.
Let's go to the last stock here, and it's Lavongo Health. LVGO is the ticker symbol. And I just put it on the daily chart, Mike. And what do you like about this chart?
I'm in this one. Just got into it. I've been trading it a little bit here and there, but today I reestablished a position, and I do think this is a high tide flag. And so I'm starting this a couple days before it broke out of that what's being displayed as a consolidation.
Mm-hmm.
So that's where I'm starting right down there is where I'm starting the flagpole. So it's more than doubled. Yeah, yep. Exactly. It's more than double. It's moved up. You had your rapid advance. I had that 41% within 3 weeks of breaking out of that area. Now it's held in tight. I think it's probably about 25% deep from that 63.55 down to the tell, which was on that bad Wednesday, how it shook out, went back and closed at the highs. Really should have been buying it on that day, and I just missed it. Your mindset on that day is, defense and protection. It's not, I'm going to buy the craziest stock in the market.
Exactly. But I was watching this stock. I was like, oh, maybe it'll come back to the 50, give me a real chance to get into it. But the best stocks, they just don't do that a lot.
Yeah, they don't. So anyways, this is breaking out of what I think is a high tide flag. That doesn't mean it's going to work. It's just like you see a cup with handle and it breaks out. They don't all work. Right. So, it was, in my opinion, if you can draw a declining tops line in there, that it broke out of that today. We put it on our swing trader product that Justin and I run, and we're going to do a webinar on it on Swing Trader next Wednesday for anybody who takes the product to kind of get into more of the details, or if you're taking a trial. And this was a pretty aggressive one for us to put on because we tend to put on a little bit slower, tamer names. So this might not work out. But I think it has huge potential. From what I understand about this is they're tackling the important things like the diabetes and the hypertension and
Yep.
all the things that that some people have to deal with. And so it is, and there are a lot of people in my category that are going to benefit from a company like this. So I think a huge potential, again, lots of risk. Let's look at the weekly chart real quick before we wrap up. And what's nice about this, that's so impressive, is the sales growth. Unlike the Tesla that we were talking about, that it has some acceleration, but it's really a story. This has 100% after 100% sales growth.
Remarkable. Yep.
And it's just a couple quarters of some positive numbers on there, but it's a rapid sales, and most of the time 30-40% sales growth is enough. This is 100% every quarter for 6-8 quarters. That's huge.
Yeah, and so another one to definitely keep on the watch list. On that weekly chart, you can see that really strong reversal, but definitely do some research on it. They are well positioned, but you also want to understand the story behind this, especially when you start getting into some of these stocks and you try to build a bigger position. So there are a few ideas that are worth adding to your watch list. Thanks, Mike, for joining us today.
Thanks for having me back. It was so nice.
Next week, we are going to have another podcast favorite on the show. We are going to have Jim Ropel. He's going to be returning back. Jim Ropel is...
You didn't tell me that. So I'm sandwiched in between like the two biggest dudes.
Pretty tough. Pretty tough for you, Mike.
That's messed up.
Jim Ropel is the founder of Ropel Capital Management on the show, and maybe we'll broadcast when Mike gets me back too.
I'm going to get you back. Yeah, Jim is as smart as it gets, man.
And yeah, he's always super positive, super encouraging, and you learn a ton. So you definitely want to check out that show too. So that's it for this week on Investing with IBD. I'm Marusha Pierce, and as always, thanks for listening.